Hello, I'm Dean Borg. I'm with Don Rose, the president of U.S. Commodities, and Darren Newsom, who's the senior analyst at DTN. And this is the Market Plus edition of Market to Market. Well, Don, this past week we saw prices declining, and it's counterintuitive to me that we can have so much dry weather across the Midwest and corn and soybean prices going down.
Yeah, it is. And you know what it really means is the market's always right. And what it means is that we probably are too high for the conditions that we have, and the trade is optimistic that we're going to have a weather pattern change. Now, that can be right and wrong. But I think it also says that we have enough of a buffer in corn that the market was comfortable going down.
Darren, corn prices, are they likely to go down even more?
Very good chance of it.
Really?
Because we just don't have this bullishness coming back into the commodity sector as a whole. And with corn being one of the key commodities and no real push right now from the supply side, fundamental side, looks like it just wants to continue to drift lower for the time being.
What about soybeans?
Soybeans have a more bullish fundamental picture long term, and so that's going to give it some underlying support. Still going to be still weather's going to be a key factor, but still going to have to find buyers who are interested.
And do you agree with that, soybeans?
Well,
and then come on in with wheat.
Yeah, it always, it's a short term versus a long term. Short term is going to be dependent on our supply. We lost 800 million bushels in South America last year. Next year, we probably bailed back 1.1 billion. So we can build back very quickly. So I think short term, that's true. And then South America is going to be right on our tail. But when you look at the wheat market, it's one that our supplies are starting to sink a little bit in the U.S. and the world, but they're still very comfortable levels. And so I think it's really what's the fair market value.
And we had a note from one of our viewers in Kansas this past week saying they're winding up the wheat harvest there. Does the time, and as she said, well ahead of schedule, is the timing on that at all influence the wheat market?
Well, it means it could be putting in an early seasonal harvest low. But again, as Don just pointed out, we don't have a tight situation. Even though yields were a bit disappointing, we don't have a tight situation globally, so there's really no reason for the market just to take off and run.
We've got some people who have contacted us this past week. Bryce in Storm Lake, Iowa says, USDA lowered the corn crop rating report this week, but did not lower the expected yield or carryover. What's the reason for staying the same, Darren?
Well, number one, USDA doesn't use NASS numbers in its calculation. So, I've always found it interesting that the two segments of government that are, in charge of this don't really use each other's information. So the crop condition numbers really have very little to do with anything. They're not all that accurate in the long run either. So USDA is going to stick with the way it projects out yield. NASS is going to continue to, stick with the way it calculates crop conditions.
Don, as dry as we are, from what I see of the cornfields that I see in Iowa, for example, surprisingly good. And here's the question from Tom in Valparaiso, Indiana, saying, how long can Indiana and Illinois corn crops go without rain? Well, I don't expect you to be the climatologist or the corn expert, but what do you think?
Well, I think we're 2 weeks early at number one, and so I think we're entering a very critical time. I would say this next week is a very critical time frame. Our yields probably will start to suffer pretty severely, and the next week also.
And Darren, Dale in Bloomington, Illinois, your ideas on plantings for the June 29th report.
Don raised an interesting point in our conversation where he was looking for large increases in both corn and soybeans. I think it's possible. I'm not quite on that same level yet. We may see some increases, but we're already at very large levels. I think the biggest thing will be with this early wheat harvest, is there going to be more soybean acres going in on double crop, or because of the dryness, was that trimmed back? So I think we could see some small increases, just not quite as large as what some of the discussion is out there.
And Don Phil in Canada says, how many limit moves have there been for the June 29th and 30th USDA report? Do you expect a limit move this time?
Well, he is right. It's a big report because it has also the stocks in all positions and the acres, so you have a chance for two things to move. And remember, the last couple of years, the stocks numbers moved about 300 million bushels on average on corn and 20 million on soybeans. So it's quite possible to have a limit move. But all that is dependent, Dean, really on what the weather is and how oversold we are. And there's a lot of factors beside the numbers.
We've been talking rain and drought here, but the world economy is dry in itself, isn't it?
Well, and that's a good way to put it. It is dry. We've got a huge debt load that we're trying to figure out what to do. Meantime, everybody around the world's still spending, and that's a huge anchor, and eventually, you know, it's one that just slows down the economies.
And what do you expect?
Well, let me throw something in
Yeah.
here on what Don said with this limit move. There is a strong possibility, but what I'm most interested in is how the markets react now that we have all these expanded hours and changed hours between the Globex, the electronic, and the pit trade. Will this mitigate some of this pent-up excitement that we see from the time the reports have been released to the open? We got a glimpse of it, kind of a dry run with this June report. There wasn't a lot in it, but you know, we could have seen a limit move and we didn't. So as we go forward into this June 29th, a much larger report, you know, maybe again these extended hours allowing more trade over a longer period of time, maybe keeps us from a limit move.
Just a quick final question to both of you. We haven't touched on livestock at all. Just let me ask it in this way. Is the dry weather at all going to influence the hog and cattle markets? Don?
Well, I think it will, because if the corn market moves higher and the soybean milk market moves higher, I think the livestock market will move higher just from a crush standpoint. So I think most definitely, and also it works in the reverse method. So I think, yeah, most definitely.
I would agree. You know, and if you start talking about a very long, hot, dry period, that's never good for the hog market. I mean, as far as the actual how they perform. So that could bring some buying into the hogs as well.
Thanks for your comments. Don Rose, Darren Newsom, thanks a lot. And that's our June 15th, 2012 Market Plus edition of Market to Market.